Dr. Babasaheb Ambedkar Open University.
Hello dear friends, welcome again in the course of Fundamentals of Financial Accounting. As we are discussed already in the past lectures, what are the journal entries, how the entries will be recorded in the books of account. Then we try to understand subsidiary books also, like a subsidiary book of purchase books, sales books, return books, cash books, single columnar, double columnar and three columnar and all. Now we are trying to understand from this lecture onwards how to post these all transactions in the ledger book, where you can easily get an idea that what amount of assets or liabilities you are carrying. Assets vary, maybe land, building, plant, machinery, etc. Or maybe the person's accounts were actually how much amount holding by each person's, expenses, incomes. These all transactions will actually record in this particular specific book of accounts in the specific ledger name, and we'll get an idea the basic brief transfer amount, the actual from the journal entries to the ledger account. So here we are just trying to understand the ledger posting one by one. In this particular chapter, we will try to understand the ledger posting of the ledger books which are actually prepared from the journal books. Now here with some important topics to be discussed in this particular, what is account and how it will be considered in the ledger book. So ledger, what is ledger? Features of the ledger, specimen of the account, how you can prepare the ledger account, some important part of the ledger books. Then we'll have to find out the steps of posting from the journal entries. As we are actually try to understand how journal entries will be posted into the ledger, and that posting will affect in this ledger book in which way, that we'll try to understand here. And then at last we'll try to understand one illustration also. Now here what is an account and ledger? Account is all about, account it means the transactions which actually identified through the economic transactions, and will find out the which particular event and transactions have a specific name of the specific entry, and then that specific entry will be recorded in this specific books of accounts, that is considered as a part of account. The definition of account, it means account is a summary of statement where all transactions related to the specific person, assets, expense, income, etc. So it means that the account, it means after you identified the event, and event is actually converted into a monetary terms which is actually having an effect of the transactions, and that transactions will identify the specific name or maybe the specific account or a specific person or maybe any kind of assets and liabilities, where will be recorded in the particular books of accounts with the specific principles as per the double entry showing there in the net effect. So here the accounting transactions were recorded in the books with twofold effects, with accounting principles having a certain name, which are maybe assets, maybe person, maybe liabilities, maybe expense, maybe income, considered as an account. So here next is definition of the ledger. What is ledger? Ledger is all about, it is a special book which are actually prepared to identify the summary of the each person, or a summary of the each account, or a summary of the each expenses or an incomes or an assets can be identified on a specific period of time. It's considered as a ledger book. So book account in which the accounts relating to the person, goods, etc., expenses and incomes are kept is known as ledger. So all accounts will be prepared in that particular book, it's considered a ledger book. The ledger book is actually a main book, and this main book is prepared for getting a summary of the all different transactions takes place during the specific period of time. Origin. The word ledger is actually derived from the Dutch word that is leger, which means to lie. And that means it's put entries from the journal into the permanent place. So, ultimately the journal book is actually a first book where you are actually taking an initiative to identify any economic transactions recorded in specific book or in first book to identify that these are the economic transactions. Then you might required the further part of informations and knowledge to get the summary of each particular person or a summary of each particular account, what is the balance of that each account, that you can able to understand and able to get the information from the ledger book, where the different accounts were actually recorded in the ledger book, and then you will get a permanent recording entry in that books, and that is why it's considered it's a main book. The next is feature of ledger. So, features of the ledger is it is known as a principal book, or you can consider it's a main book. Principal book or a main book. Why it's considered as a principal book and main book? Because of ultimately you will get the all basic informations of each particular individual accounts informations from the ledger book. Suppose if you are having a transactions of how much purchases and sales, then at the end of the specific period, purchase book you will get definitely some amounts, but that is periodically you would be able to get the information. At the end of the month, what amount of purchases you have, that you will get it. But suppose if you want total purchases where the credit and cash both the purchases are included, then you will able to get the information from the ledger book. So, from the ledger book you will get an idea that how much total purchases are there. Out of this purchases, what is the credit, how much credit purchase and cash purchase also can be able to understand. So, that is why it's considered a main book. Transactions are posted from journal to the ledger. As I told you, when we are preparing a journal entries in the journal book, I'll tell you that what is the format of the journal book. The journal book is date, particulars, then LF. LF, it's a ledger folio number. Why we are actually preparing the LF column in the journal book? Because of whenever each particular event or each particular transactions effect recorded in the ledger book on which particular page, that is actually convenient for the audit or a convenient for easily recognize that these transactions were recorded in the ledger book on so and so page. So, we cannot miss out the transactions entry in the ledger book. So, that is why all these particular transactions are posted from journal book to ledger book. The next is each account has a separate ledger account, correct? Like if you are going to talk about the person, whether it's a live or artificial, live person like Manoj's account has to be prepared, live person like Dinesh, live person like Falguni, XYZ, any accounts has to be prepared in this particular ledger book. Non-live like HDFC Bank, State Bank of India, or any institutions where you are having a transactions with them, then those accounts will be also prepared, artificial accounts. Then assets like a land and building, plant and machinery, these are the accounts, furniture, vehicles, equipments, etc. Or then you can having some expenses accounts like all kind of expenses which are actually paid, like salary account or a rent account or XYZ. At the end of this account, it will be transferred into the profit and loss account. So, this all accounts will be prepared in the ledger book. It helps in finding the balance of each account, correct? So, ultimately at the end of the year, ledger account will be closed, and then we'll have to find out what is the closing balance of each account, and that the balance will be transferred into the balance sheet or in the particular specific account in the financial statements. So, this particular help you to find out the closing balance of each account. It forms the basis for preparing the trial balance and final accounts, correct? So, ultimately it helps to prepare a financial statements at the end, because of when we prepare the closing balance and closing balance transfer into this particular balance accounts like a trial balance. So, at that point of time we would know that what is the closing balance at the end, and that closing balance, whether it's a debit or credit, will be transferred into the trial balance, and at last from the trial balance will prepare a financial statements, and in the financial statements any particular account affects to the respected particular financial statements accounts or a statement will be transferred. So, these are the features of ledger. Now, This is a specimen of the ledger account, how the ledger will be prepared. So here the name of the ledger account, XYZ plant and machinery, or maybe the person like Manoj, or it's maybe any kind of a bank account, cash accounts, if you are preparing and transferring entry from the journal book. Suppose if you are already prepared a cash book and passbook, cash book and bank book, then the cash book's closing balance at the end of the month will be transferred into the here in the ledger accounts. This is a debit, so left side is debit and the right side is a credit. So if you are going to see the left side, the date of the transactions which was actually takes place here in the ledger book, particulars, from where it is transferring in these particular accounts, general folio number. If you remember in the general book where we are writing a ledger folio number, so we want to cross verifications and we want to actually for the audit perspective, in the journal book we are writing a ledger folio number, so on which page the ledger account has been prepared. Suppose this Manoj account was prepared in the ledger book and the page number 45. So what we are going to do it, when we are writing journal entries and when we are having an account of Manoj, the Manoj in front of the Manoj account will write the ledger folio number is always 45. Why? Because of this Manoj account were prepared in the page number 45 in the ledger book where easily can be identified. And suppose if particular these transactions were transferred from the journal folio number on the page number 10, so we were actually writing here the 10. So date, on which date this transactions takes place, from which particular account we are transferring here, from which page this actually event takes place, and what is the amount. So that is the debit. The same all four columns on the credit side. Date, particulars, again journal folio number, and then the amount. So debit, the amount were actually transferred on the debit side, and the credit were the amount were transferring on the credit side. Suppose if I want to explain you, I'll explain you in the letters part also, but here if the transaction is like this, Manoj account debit to sales account. So how it will be posted here? Very simple. Here the Manoj account is debit, so it will be posted on the debit side. The opposite name will be write down because of we are preparing a Manoj account. So here the Manoj cannot be written. So we'll have to write here to sales. Suppose the amount is 2000. It will be write down here 2000. Suppose these transactions were actually written in the general folio number, page number 10. So here in the general folio number 10. Now in the next transactions we have one more transactions where the Manoj is actually paid. So Manoj paid cash, cash received, cash account debit to Manoj account. So here the Manoj is credit. So it will be posted on the credit side. Opposite name is cash. So here buy cash. If he paid 2000, so it will be written here 2000. And suppose these transactions were actually written in the general folio number, page number 12, then here it is written 12. So this is the way to this, both the transactions were posted in the ledger book in specific account name Manoj. So this is the way to record the transactions in the books of accounts. Now here I want to explain something more also. So here the thing is how it will be written, the date, the record the date of the transactions as entered. So the which date the transactions were take place, the same date will be written here. Then particulars, we have to write the source, the name of the corresponding account. As I mentioned you, it has to be written the another opposite accounts. Suppose if the Manoj to sales, then the corresponding account is actually sales. So that's why we have to write here the sales. Suppose if the cash is received from Manoj, so when the Manoj is actually payer, cash received, cash account debit, so the opposite name or the corresponding account is cash. That's why we are going to write here the corresponding account involve the transactions on the other side. Now and the next is general folio. records the page reference of the journal or a subsidiary book, making it easy to verify. That is audit perspective. We just need to verify the transactions where both these effects were actually recorded in ledger book as well as in the journal book. Then the transaction of amount, which amount actually takes place on this particular event, that amount has to be identified and that amount will be recorded in the fourth column, that how much amount were recorded. So, this is the specimen of a journal ledger book. Now, three forms of ledger book. First is bound book ledger, that is hard bound book with a serial page number, all also indexed at the beginning. So, that is hard bound and it is preferred by small traders due to a low cost and easy long term preservation. So, ultimately the hard book ledger book, where the book was actually ready, right. If you are going to see this, you can easily identify these books on a stationery shops, right, where the hard books are available, index page were given, all the page numbers were also given, and you just open the ledger accounts on a different page, correct, and then this particular book is actually easily available. But most probably that small shopkeepers and the small businessmen are preparing such kind of ledger books, right. Here you cannot remove or add any of the pages in this book because of its book is already prepared, right. That is one kind of ledger book. Second is loose leaf ledger book, where the pages can be actually identified and that the pages filed between the thick covers of the metal sheets secured with the specific lock system, right. So, as many as pages if you want to add on this particular ledger book, you can add it. So, ultimately simple leaf you can actually identify where you prepared the ledger name and ledger account, and that the page can be added here on this particular sheet, or you can add it into the particular file and continuously you can put it. You can remove as many as pages you want to remove, and you can add also as many pages you can add also. So, removal and added the pages very easily. Only the thing is you have to make sure that the accounts which are actually already record or maybe the prepared in a ledger book should not be removed from it. Otherwise, tracing the accounts and telling of this particular accounts for the audit perspective may be very difficult. Third is card ledger, that is using an individual card stock per account, and then it is to be kept in the cabinet where steel that the steel cupboard or something road mechanisms were there, and it is actually convenient or scalable, but that you just have to very carefully make these all accounts. Most probably banks and other people who are actually maintaining their ledger books in such a particular format. Why? Because of they have a huge number of accounts, right. So, that is why they kept such kind of card ledger book in for preserving of such kind of ledger information. Next is steps for posting from journal entries. Now, first is open accounts. So, now here the open accounts draw the affected accounts in the ledger. So, ultimately when you are actually having a journal entries transactions, then you have to identify the how many accounts to be opened in the ledger book. So, suppose if you have a 5 transactions, you just need to identify, suppose which are the accounts that you have a land and building account, cash account, bank account, capital account, then purchase account, sales account, then you identified some expenses paid like a salary expenses paid or rent paid or maybe stationery purchases or some other expenses are there. So, you at the end you find out that these 10 accounts are actually required in the ledger book. So, first of all you need to identify the how many accounts is required to open in the ledger book. So, that accounts will be opened. Then identify side. Debited account in the journal gets posted on its debit side and credited account on its credit side. As I was explaining in the previous slide that when you have a transactions that Manoj account is debit to sales account. So, we are preparing a Manoj account. So, ultimately this account will be posted into Manoj. So, Manoj is debit, that is why it will be posted in Manoj's account debit side, only the corresponding name will be written there. So, opposite name is actually consider as a sales. So 2 sales on the debit side of the Manoj's account, an amount will be written there. The same way, if it is a credit side return, it has to be posted in a credit side. Like if you received a cash from Manoj, so cash comes in, cash account debit, Manoj is a giver, cash account debit to Manoj account. So Manoj accounts will be posted into his ledger account. It is credit, that's why Manoj's account credit side corresponding name is by cash. That is the way to post it into the journal book. The third is enter date. Write the exit transaction date, the date which we are taking here, the same date which were actually written on the journal entry, right? The journal entry date will be written into the ledger account. So the transaction date actually are supposed to be written in the ledger book. So suppose if the transactions takes place on the 1st April 2026, when you are posted, the posted date is whatsoever, it's immaterial for it, but the transaction date is 1st April 2026. So at the time of posting, when you are writing a date of this particular transaction, you have to write there 1st April 2026. The next is write a particular information, so name of the opposite corresponding account, that is if you are writing on the debit side, it has to be written to and the name of the account. And if you are going to write on the credit side, then by the corresponding name account. All right. So that you have to be right. If you are going to write and posting on the debit side, you have to write to, and if you are posted on the credit side, you have to write by. And the enter amount, write the exact value of the amount which was written in the journal book. So that when you are posted, see when you have to be very careful. When there are multiple transactions were actually in the journal entry, at that point of time you have to be very careful. Why? Because there are so many figures were there, so you have to identify which figure will be recorded, posted in this particular account. Very simple way, only which we have to identify that in which particular account we are posting that, and what is the amount of that account in front of it. So the same amount will be written on that particular posted. So write the exact monetary value in the amount column which was actually recorded in the journal book in front of the specific account of the posting transactions done. That's very clear. So that you have to be very carefully, correct? So these are the steps. Now see the example. The transaction is purchase goods of rupees 1000 for cash. So what is the journal entry in case of when you are purchasing goods of rupees 1000 with cash? Purchase, so that goods comes in, purchase account debit. It is a cash transaction, so cash is actually given, so cash is credit. Transactions on 1/6/2026, so 2026 June 1st, purchases account debit to cash account being goods purchase for cash. Amount is 1000 debit, 1000 credit. Clear? Now we need to identify how many accounts. So if you are going to see the previous slide once again, I'll tell you what are the things. What was the first thing? The first thing is open accounts, draw the affect accounts in the ledger. So now here we need to identify the ledger accounts. Which are the ledger accounts to be prepared in the ledger book? One is purchases and the second is cash. So these are the two accounts which we need to prepare. Here the purchase account and cash account. Now go back again. The previous slide, the second is identified side, debit account in general gets posted in the debit side and the credit account on it's the credit side. Now see the posting. Here the transaction is purchase account. We are posting first in the purchase account. Purchase account is debit. So this particular transactions posted in the purchase account debit side, correct? The corresponding name is cash, and when you are posting on the debit, it is written to. When you are posting in the credit, it is written by. So here it is posted on the debit side to cash account. Amount in front of purchase is how much? 1000. So it will be written here 1000. Correct? So the date is June 2026, 1 to cash 1000 rupees. Again see the previous slide, so you will able to understand what is there. Third is enter date, exact the same date which we are actually written at the time of journal entry, the same date will be written here. What will be the name? The name is actually, when we are posting, we just need to see the what transaction will be posted in the which account. We'll have to take another opposite corresponding account of the same. So when we are posted a purchase, opposite name is cash. So we are actually writing cash in the purchase account debit side, the amount exact which was written in front of the entry posted in the transaction, correct. So that's why purchase we are posting, and 1000 rupees in front of purchase, it is written 1000 here, the date is written same, opposite name of the purchase is cash, it is posted in the debit side because of the purchase is debit, and that's why it's written 2. Now another posting, cash. So this will be posted in the cash account, as the cash account is credit. So this entry will be posted on the credit side, opposite name is purchase. So by purchase account, in front of the cash how much written? 1000. So 1000 will be written here. The date, the same date which we are going to write here, where the transactions and event takes place. So this is the posting. This is called the ledger posting. In the ledger book, there are 2 accounts, and both these transactions were posted in this account. Now one more transaction, journal entries in the books of Kantibai. See here in this particular transaction, if you are going to see the journal entry, how many accounts are prepared? One is cash account, stock of goods, then capital, then purchase, then cash, right. So here the cash account is prepared, stock account is prepared, capital account is prepared, and purchase account is prepared. The cash is actually comes 2 times, so we don't need to prepare 2 cash account. Cash account, ultimately there are multiple caches, but we have to prepare only 1 cash account. Ultimately both these transactions will be recorded in the ledger book in the same cash account, correct. Now we will try to one by one posted. First is cash account debit with how much amount? 12,500. So this will be posted into the cash account, correct. This is debit, so it will be posted on the debit side. Cash account corresponding opposite name is capital. It is posted on debit, so that's why 2 capital account. The date is 2026 April 1. The amount is 12,500. We are not going to write this amount. I told you very precisely, when we are posted of the specific transactions, we have to identify the same amount of posting entry, taking the same amount in front of it will be posted into the account. So here 12,500, because of we are posting of this transaction, so amount also to be taken the same amount here in the posting. The next is stock account. Stock account is also debit. So in the stock account, debit side, this date 2026 April 1st 1, opposite name is capital corresponding. So that's 2 capital account. Amount in front of stock is 3,500. So 3,500 will be written here. So this is a posting. Next is purchase. It is debit. So in the purchase account, debit side, because of we are posting purchase account, so debit side, opposite name is cash, 2 cash account, amount is 1,700, the date is 2026 April 5. The next is cash, cash account, credit side, 1,700, so cash account credit side, corresponding opposite name is by purchases, the date is 2026 April 5, amount is 1,700. And then one more account, capital account, it is credit. So in the capital account, credit side, there are 2 opposite name. So both will be written on the capital account credit side. Total amount has to be written 16,000. But because of it, there are 2 names, we are going to write name along with their amounts. So first to 2026 April 1, cash account is 12,500 and stock account 3,500. If there was only one account, then the total amount will be written on the other. Ultimately, here we are going to write 2 accounts, but both the accounts have a different name. That's why both the accounts are written along with the amount. If you want to write total 16,000 outer column, you can write both this amount inner column, then make a total outer column 16,000. But this is the right way to post it, this transaction in the books of accounts. So this is the way to general entries to be recorded, posted into the ledger book. I think you might understand how the transactions of journal entries written in the journal book to be posted in the ledger book, how it will be. Very simple way. First need to identify the journal entries, then identify the number of accounts to be opened in the ledger book, and then the same transactions will be posted into the ledger book along with the specific ledger folio number and journal folio number. So easily you can trace out the transactions whether it was posted or missing down. That is what I just want to explain you. I hope you might understand all this ledger posting. Thank you so much.